Naveen Mishra joins us, Senior Director with Gartner. And Naveen, I must say that I have to just relax a bit every time when we get into an engaging conversation with Jim Rogers, and just so fascinating to hear him. Now he's talking about how America, in a sense, is going through a problem of its own, which is demand, inflation. These are macro indicators which historically have impacted IT outsourcing. And I'm looking at two experiences, 2000 and 2008. Both the times when these crises had hit American economy, it impacted Indian outsourcing industry significantly for next 12 to 18 months. Will it happen again?
Thanks for having me, and I also enjoyed listening to Jim. When we look at the IT services industry for 2022 and 2023, we have a growth rate of around 6+ percentage point for next 2 years. So the macro view from an IT services perspective is pretty robust from our standpoint. However, as the saying goes, if US economy is in trouble, IT services companies in India will have their own set of challenges. Now, this time, the challenges would be around maintaining profits. We already have talent issues anyways, eroding the profit margins for a lot of IT services company. And with the economic issues, that problem is going to further get complex. That's one element. The second element, the entire inflation and the demand and the supply chain issues that we face, that will have a negative impact on how IT services, especially the Indian IT services companies, are going to deliver in different parts of the world. And clearly, US happens to be one of the biggest markets. So there is going to be issues around profit margins, how you manage the talent, and what kind of services are you going to deliver to the enterprises in America? Because as the economy starts getting a bit more turbulent, which is what it seems to be right now, there will be a change in gears. The change in gears will play out more in terms of cost rationalization, automation, investment into more business resilience kind of activities. So yes, there will be also a change in what kind of services and engagements American companies will expect from Indian IT services.
Sure. So, Naveen, just to put it into perspective for our viewers, what you're saying is that we've already seen the best of IT growth in FY22 already, right? And then will growth rates taper from here on? And is that what the equity markets are also pricing in with the kind of crash that we've seen in IT stocks?
I mean, if you look at the IT stocks, clearly we get some of the shockers from the industry, and the situation does not seem to be improving anyway. So yes, I mean, 2022, the projections for 2022 are quite optimistic in that sense. And for all the IT services companies out there, I think it's really important for them to start preparing for the change which is happening, change in terms of what kind of talent you have to handle, keep an eye on the geopolitical tension which is already there, and start preparing for sort of a new set of services and engagement as well, so that these impacted companies still find you relevant over the next 2 to 3 years.
Okay, in fact, you know what? I'm going to also bring on board Apurva Prasad from HDFC Securities also into this conversation. Apurva, hi, morning. Aside of all the issues and the dynamics for the IT sector that Naveen just highlighted, can inflation derail the IT story? And you think that also is going to have a huge bearing on the kind of client spends that we're going to see going forward?
Yeah, actually, it's already started to play out. If you look from an IT services company's standpoint, this is more on the supply side rather. So I think these are some of the challenges which most of the companies have, in any case, been navigating for the past many quarters. So what was more an offshore-centric talent supply crunch, it seems to be permeating more in onshore geographies too. So I think this wage inflationary environment is something which is likely to continue. Although we do understand that it has tapered off from the recent peaks, but I think that's the most I would say the base case is that it's likely to continue on for the next 2-3 quarters or so. The other way to read this is it's also an indicator of demand, because essentially what you're talking about is the longevity of high growth. I think that's something that one must bear in mind. The fact that there is longevity of demand and propensity to grow higher for a longish periods of time. And I think that has not really changed. So while some of the risks can get bigger, which are associated with the macroeconomic environment, and I think it's manifesting really more from a increasing cost of equity that's resulted in this direction. But if I have to purely look from the demand standpoint, if I have to look at the commentary that most of their top clients or enterprises have been giving out in terms of the trajectory of tech spend, I think there is fair amount of confidence that these numbers are not at risk.
Good morning, Apurva. So if we see the numbers that we already have with us, we've seen misses on margins on all counters, barring maybe a TCS. So going forward, what would your play be? Many are now saying it could be emphasis for the growth story. It could be emphasis as a defensive play, Tech Mahindra for the 5G play.
So interestingly, if you just look at how it's played out, the stock correction has really been more a function of the derating that has happened. And in fact, on a YTD basis or period slightly more than that, the earnings upgrade has not really happened. So one can sort of make a case that the rate of earnings upgrade, that has flattened out. But it's the estimates have been actually flattish. There have been very few downgrades. In fact, if I look at some of the mid-tiers, even on a YTD basis, there has been more than mid-single-digit upgrades that have taken place. So I think that really corroborates into this strong demand that is likely to continue. We do see some pockets where some of the challenges can get bigger. I mean, a lot of this is macro related, but the point being, the kind of bookings that most of these companies have had, and this is with a lot of these bookings being short cycle deals, that I think gives a good amount of visibility in the near term. So the way we are looking at it is we are looking at companies where there is very strong, growth visibility, and the structural drivers, continue to remain strong. So I think that's the cut that we're looking for. And if I have to name some stocks, I think which would probably take some of these. So it is Infosys and HCL Tech from the tier ones, and from mid tiers companies such as Persistent Systems or an Emphasis.
Okay, so those are the top picks for you from the top tier as well as the mid-tier companies. But Naveen, if I can come to you, the IT sector so far, year to date, in India has underperformed. It's underperformed the Nifty by as much as maybe in some cases 15%. Nevertheless, if you look at the Indian IT and IT services companies, they still may be one of the most expensive in the world, whether you look at their peers or even Accenture. So given that, do you expect the sector to perform with more pressure, and how it is just viewed globally, the way the FIIs have also been pressing the sell button?
Yes, if you look at the Indian IT sector, the fundamentals are very strong, actually. And those fundamentals actually come from the desire of serving the long-term client demands. And those client demands are actually a lot more sustainable. They move around areas such as cloud, artificial intelligence, and that is going to continue, like even Apurva said. Now, when we look at the Indian stocks and the Indian companies, they are poised for growth, for long-term growth, given that the demand side equation is fairly strong. Though one of the issues that I that we strongly face is a lot of FIIs and actually venture capitalists. They seem to be pulling out. They are in a mode to actually prepare for the worst. And as part of that, they are cutting their exposure around the globe. And India is included in that list as well. And a lot of, money is actually being pulled out. So it's VCs, it's those fund houses who actually are concerned about the economic challenges that we have. And from that, they're actually preparing for the worst.
Apurva, hi, good morning. Wanted to get in your take. Valuations aside, do you think that it's fair to compare the kind of fall and meltdown that we've witnessed in tech stocks on the NASDAQ with Indian IT?
I think while the correlation is not very large, there are obviously comparables. The comparables are more in the global IT services. I think the correlation is much higher if we look at the broader S&P 500 basket, which is the end clients. So one of the things that we have seen historically is in a scenario that there is a slowdown in growth, whether it is US GDP or S&P 500, which are a lot of them being end customers. The growth premium that mid-tiers enjoy over the tier 1 IT or the large cap IT, that tends to come down. So that's fairly highly correlated. But yes, there has certainly been valuation which has been correlated to NASDAQ in the past, but I think it's more correlated to the S&P 500 trajectory. There have been cuts in the recent past, but we will be monitoring how that progresses.
All right, Naveen, just purely looking at the kind of trend that we've witnessed on the deal wins, it has been fairly strong momentum back home. Do you think that that momentum is likely to continue across the board for large and mid-cap IT?
In mid-cap, yes, because we have fairly strong demand scenario. Digital transformation is a big enabler. People want to invest into security, business resilience, and all of these components are going to feed into the tech spending for overall for India. So yes, the large and the mid-sized ones will definitely see ongoing long-term growth. The minor hiccups, I think they are there, but over time, they will actually streamline.
It's been a pleasure interacting with you. Thanks much for joining in and giving us an in-depth view as to what the outlook is when it comes to the entire IT sector. For now,